Hello, YouTube. Could we be on track to rally 100 points on SPX or 10 points on SPY in 1 week? We're going to talk about Tom Lee, who says the S&P could rally 100 points on a lighter inflation reading this week. That is a really big call, and it's called a tactical position. I was quite surprised we held onto the uptrend today. We're right inside this gap, so they got flushed out hard on Friday. So what I want to start with is actually just talking about this quote. We're going to go through and see exactly who Tom Lee is. We're going to look at that inflation data to see if we can understand what he is telling us. Because as much as we might have a very strong opinion, there's something I learned from Peter Brand, who is a market wizard. He's a lot smarter than me. He's been trading for a very long time. And this quote goes back to 2011. It says, strong opinions weakly held. So what does that mean? It means I might have been wrong in my weekend prediction. Oh my goodness, you might be wrong. Yes, I might have been wrong. And what I'm often noticing in my personal trading is that I'm usually right, but I'm usually also early on the entry and on the exit. So I've been waiting for the corrective wave ever since June. Does not mean I've been losing money since June, because we follow the price action. We follow the price action. It tells us what's going to happen. And going into the weekend, what we were noting was that we were right here on our uptrend. We got a big slam into Friday. We closed at the low of the week. The future sold off, and I saw the potential for us to crack this uptrend and come down to support as a pretty strong and compelling story. If we look over here to our weekly chart, what do we know? Last week's low, 437.06. This week's low, 437.59. Let's go to QQQ. Why? Lower low on the weekly here. 36452, 363.4, which is roughly a 1 point lower move. We also talked about how I think we're at a decision point for QQQ. I wasn't sure if it was going to be up or down nuts. That came here to our turning point number 2. So we now have a failed breakdown on the weekly. Let's go to S&P and see if we can get an update on the notes to understand if we actually got confirmation of a bearish move. Well, I hear rumblings of a bearish move, but it's not there yet. Hollow candle signal the expansion is continuing. Hollow candle as of now. It's only Monday, so let's not get ahead of ourselves, but it's holding. And lower lows are a warning. So we got our lower low back to our big pump week on June 26th. Ended up just closing higher. That was a failed breakdown. So now I'm noticing that we did not see the breakdown I was expecting. And when I look to the story that I am hearing from people like Tom Lee and others, well, it's a pretty simple story. I thought everyone was looking on one side of the tape, but apparently they're not. Wall Street strategists stick to cautious equity view. There's S&P 500 target for the second half of the year is the most bearish on record, right? A record. Why? Hey, if they were so wrong into the beginning of the year, well, it looks like, yeah, they might be wrong into the second half of the year. They're doubling down. It's okay to be wrong, but these guys want to stay wrong. They thought we'd be up by 20+% in 2022. Well, that didn't happen. And then for 2023, they think we're going to be closing red. And fear and greed is still at 78. So we're not seeing that actually dip down. And what's so interesting to me is that we actually heard from multiple Fed speakers today, including Barr, who's the vice chair of supervision. And this is important because he says there's a bit more work to do to curb inflation. Rates are near a level needed to get inflation to 2%, really close to restrictive, but still a bit of work to do. We also heard about increases in bank reserves that are going to be needed, and banks actually did okay today. We noticed that big tech was down, and we will talk about that in a moment because I think there is a very clear story for that. I forgot to ask earlier, but if you wouldn't mind, please consider smashing that thumbs up and subscribing to the channel. I would greatly appreciate that. So I know you might be a little bit confused because on the weekend I was calling for a mega big crash. I was calling for a dip, for a corrective wave, and maybe for us to go down. I might have been wrong though. When I look here objectively at the chart, I'm noticing that we have this cup with a handle, and that's the first thing I know. The second thing I note is that, again, every one of the fund managers, let's be honest, retail is not going to move the tape. They don't really have a big impact. However, are they all looking at one side again? Answer is yes. So 55% of people still think we're going to go down. And when we asked which way the next 5% move is going to be, it also happened to be down. So thank you to everyone who completes these polls. And what I really want to touch on here is just the fact that it's okay to have a working thesis. But what I'm trying to do here is, do we actually see confirmation? Well, so far we don't. Everything might change tomorrow or on Wednesday when that CPI comes out, and we'll review that in a few moments. But here's what I want to think about. If I'm being objective, And we'll talk about this in a moment here too. So we'll talk about the the exuberance that is not inside of tech stocks, meaning that we're looking for a move in things like ARK, and ARK moved today. So that's really important to me because bets on unprofitable companies are tamer than usual, signaling tempered zeal for equities. We also saw nearly a 1,000 point rally in 3 hours on Bitcoin, and it looks like it's getting spicy out there. So here's what I was asking myself today, because I actually bought a few stocks. If you want to see what those are, join us for 14 free days to trade with me, Justin from YouTube. But because I have a bearish outlook, I want to ask myself, again, objectively, if that's the low of the week at 437.59, does that make sense? Yes, it does to me. That would mean a higher low, which means that the bulls are going to put in a hollow candle because it's going to be hollow. We're going to be closing higher. Again, we can see it's hollow right here going back, and there is no lower low, which means that there's no warning the expansion is waning. That's as of right now in the Monday close. So I'm asking myself, okay, overnight on the E-mini futures, we did get that break. We got a failed breakdown. So if we look here, nice and close, because I track these things. So we look here, there's the lower low. So we went to a lower level, and then we snapped back. That's a failed breakdown. Same thing happened 2 weeks ago. So it happened 2 weeks ago, it happened this week, and boy, was that a big, fat green week. That was a big move. I don't want to be on the wrong side of that trade. So failed breakdown happened, and we actually defended the overnight low. That is why the SPY does not have that weekly lower low. If you look over here at the NASDAQ futures, what do we know? Very similar move. We got a failed breakdown, basically flat on the week, up by 10 points on a $15,000 stock. So failed breakdown. It made progress lower, but failed to hold it. So it did not hold. It failed. We look over here at QQQ. Well, we revisited those lows because we actually got that failed breakdown here. So in terms of risk management, if people are bullish and everyone's so scaredy pants, fear and greed is high, well, is there an area on the chart we can be tactical, like what Tom Lee is saying? I think so. If this weekly low holds, hey, we could go for a fresh big move. I don't want to miss that. I'm here to make money, not be right. So yes, I might be a flip-flopping, right? Someone who, like a flip-flopper, whatever you want to call me, I don't care. I'm looking at the negative feedback that I was expecting this week, and it just did not materialize. IAT closed up. So that is regional banks. And I'm noticing that they're actually looking like they want to catch a bid. So look here, I'm like, okay, well, they're pointing down. They're getting pretty close to stop pointing down. Inverse head and shoulders, closed green last week, continuing higher this week. XLF, same kind of thing, where it's battling for that 50 MA. It really wants to go higher. It's just lacking that confirmation. So the market didn't really care. Reserve ratios are going to go up. Big banks are not going to get spared. And we heard from like 4 or 5 different Fed speakers today. Why? Well, because the blackout period starts on the 15th. So that means they got to go, right? They got to go drill. They got to go chirp. They got to go talk. That's what they do. They got that meeting on the 26th. So into this week, which is light data, the Fed already came out, right? Higher for longer, blah, blah, blah. Got to do more moves, blah, blah, blah. Nothing really happened. So bad news can't take us down. What could good news do? Well, that's where Tom Lee comes into play here. So let's leave it there and let's move forward. So on the weekend, we did not have these prints here. I was missing this number here at 3.1. So here's what I'm trying to ask myself. I can see 2 ways this data could be interpreted. I think that with our existing trend, I think this could be interpreted bullish. And I'll tell you the reason why. The reason why is because core CPI is going to come down to 3. So if we have a look here and we look at core, I'm just going to look at these 2 because remember, the Fed cares about PCE, but the stock market does move on CPI. And just before, as those pages are loading, let's look here at this one because this goes back to last month and this is published on the 10th, which means it's from today. Used car prices fall the most since the start of the lockdown. New car deals and rising rates sap used vehicle demand. We're also going to have a lot of student loan repayments starting, I think, in September, which means there's going to be less demand, and that seems like it could be taking it down. So when we look here to, let's look at the headline number here, right? It's pretty much a straight line down from 9 all the way down to 4. Then we're going to go down to 3. That's right. We're going to go all the way down to 3. That's what the market is expecting right now. So if we go down to 3, well, that's like awfully close to 2. Remember, the Fed's target is 2. So I'm just going to show you this as a reminder because tomorrow's data point does come out. But the Fed cares about PCE. When they say there's more work to do, well, this number is very stubborn. This is inflation from services. This is the personal consumption expenditure. This is consumer price index. Don't get confused. Retail cares about this one like you, and then the Fed cares about this one. So with gasoline prices down and with used car prices falling to the lowest level in multi-years, if that headline number comes out at 3.1, I think that could be the big boom the market's looking for. If we get these numbers coming in down as well, that core CPI coming down to 0.3 would actually be the lowest reading we've seen all year. So at a monthly rate, it is compounding where the Fed wants it. But I don't know if these chickens are going to come home to roost in the PCE. But again, tomorrow is CPI. Let's focus on that. Other thing that's important is that we are going to have the BOC rate decision. So I have no idea what they're going to say. Are they going to say we're hiking now and then we're pausing again? Are they going to guide higher? I have no idea. But this is what I think is going to be important here. The other thing I would note is that I think inflation is going to come down, but then it's going to reaccelerate. So that's a problem for, I don't know, like next month, maybe even further out to September, which is when I have that big bear thesis for bank collapses. But let's look here to the numbers as well to see if there's a bearish tilt. So CPI is actually going to rise. This headline number is going to come down to 3.1. This number here is going to rise from 0.1 to 0.3. So what does that mean? It just means that we're going to be having a low reading and it's going to go back up to being higher. So it means it's reaccelerating to the upside, even though the headline number is coming down, because we're comparing to this time last year when they were really super duper high. And then finally, when we look here to Thursday, producer price index, it's going to go from a negative reading of 0.3, which the market cheered, right? Yeah. But now it's going to go back to positive territory. Why does this matter? Because producers have to produce things before consumers can buy them. So PPI leads CPI. So if CPI is going to come down on a headline number, but then the CPI is actually reaccelerating month over month, and the producer price index, which they produce in June, pretend you buy it in July, well, they're telling us the prices will be higher by about 0.5% versus the previous month. So there's your bearish tilt. And with not very much data this week, and earnings not really kicking off until Thursday with Delta and Pepsi, and then big banks on Friday, banks seem to be holding in. All right, let's get to the big piece. Why is big tech down? And I'll try to summarize this as fast as possible. And I got to thank Mason for sharing this earlier, so give him a big shout out, please, and thank you in the comments. If you're still watching, I would really appreciate if you could consider smashing the thumbs up and subscribing to the channel. Thank you ahead of time. All right, so Apple down, Microsoft down, NVIDIA down, Amazon down. Sorry, Apple, Microsoft, NVIDIA, Google, Amazon, Tesla, all down. Is there a theme? The NASDAQ plans to rebalance the curb of dominance of the Magnificent Seven. So what I think is that big market makers and money managers are front running this move. That's why these are the only theme that's down. We look at the blocks, we go to no group. They're all the biggest losers. Everything else is green or doing not bad. So what does that mean? For me, it means that if they already know that the weighting changes will be announced on the 14th, they're like, sell today and worry about it on the 14th. They're actually going to be rebalancing on the 24th. So that's going to be in about 2 weeks. So in about 2 weeks, we're going to be rebalancing. But on the 14th, we're going to get those numbers. So here's what I really noticed. And part of what I mentioned was missing in this rally. So if big tech is down, well, what is up? Is unprofitable companies doing well? Because on July 6th, not that long ago, they were kind of sucky. So let's look over here to ARK, because when we look here to ARK on a one-day chart, it is up by 3.75%. And I'm going to point out one more quick thing here. It's the golden cross. So the golden cross is a lagging indicator, which just means that the short-term price is now over the long-term price, or the blue line is over the black line. The 50 MA is over the 200 MA. And what happened after that happened? We got over both, battle with them, back test one last time. Boop, massive slingshot. We're going to look at one more. And I went through and looked at a whole bunch of names that have this pattern here. The golden cross. Get over, slam down on both, tested one last time for good measure. Boop, 20% rally for Jets. That is travel. Oh my goodness. So again, I got a whole bunch of stocks. I actioned some today. Join us for 14 free days if you want to see exactly what those are. Let's go back to ARK, because the story tells us that the tech-led rally was missing something. So what's really odd to me is that if big tech is selling off and getting rebalanced, are there other names in the NASDAQ 100, not the Magnificent Seven, which are getting bought up? And the answer is yes. Let's look at that now. So we look here at the weekly chart on ARK, and full disclosure, I am a long ARK. That is right. I am betting on Cathie Wood. So here's what's missing for moi to show that we are actually going to be getting that breakout. We're also slingshotting off of our 50 MA. So we're over here, we're bouncing off. We don't yet actually have a reversal or a trend change. Why? Let's look here really close. All right, let's go. So we look here to our highs, or I'm just looking at the highs, so just note where the cursor is. I'm looking at, and the number's up here. So we're looking at the number that's right here. So we're looking at 45.78, 45.68, 45.46. Last week, 45.43 and 45.38. So high. Let's go back here. High, lower high, lower high, lower high, lower high as of now. But it's so close to poking over and actually forming that trend change that this week versus last week would be the first time it's formed a higher high in some time over that 45 area. Gets over 46. Man, that squeeze could start. Let's look here at a 1 month chart and just note that, whoa, right? What my favorite pattern, what our algo looks for, is the curl. Well, it's starting to curl. It just hasn't confirmed. It hasn't stopped going down. So like it's getting really close here. So if this starts to accelerate, it looks very similar to a move that we saw on the S&P. Let's look and see what that was. It was right here. So we gap down. I'll just show you the move here. It's from Thursday and Friday. Did I lose some of my lines on here? No, that's my weekly chart. Here we go. Let me just go back here. Let me just get this fixed up here. Zoom in. There we go. All right. So it feels, again, keyword there being feels. Tomorrow's going to be Thursday, which means that'll be the last day going into CPI, which is going to be pre-market. Well, look at this day right here. The high is 440.1. Then what happens? Gap down, pump up. There's your big squeeze. They ultimately flushed it, but it looks like it was a trap, failed breakdown. So if ARK can birth that move by getting over 45, I don't know, we'll call it 46. If ARK can get over 46 and crack these highs, I think that could really lead to a risk-on move, and where fear and greed can not just go to 85, it might even go to 90. It could squeeze for a while longer, and then we have a day of reckoning when all of the Fed tightening finally comes to fruition. So with that said, I provided a very different view from the weekend deep dive now up here on the left-hand side. So if you want to see the warning, I encourage you to do that now. And again, we always want to buy insurance when we don't need it. So maybe we don't need it today. Maybe we don't need it tomorrow, but maybe we do. So buy it when you don't need it. Thank you for tuning in. I look forward to seeing you tomorrow.